Today, Bitcoin's weekend rally comes to an end. FTX Japan allows asset withdrawals as of today. And we take a deep dive into crypto VC trends and the outlook for this year after investments plummeted in the last quarter of 2022. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto prices tumbling after a rally throughout the holiday weekend. As of noon Eastern, Bitcoin traded above $24,000. Ether was higher than $1,600, and Cardano fell 3% to 39 cents. Okay, let's talk about the top stories. First up, Hong Kong's crypto hub ambitions are winning, quote, under-the-radar backing from Beijing. That's according to Bloomberg, which reported last night that Chinese crypto companies could be heading back to Hong Kong. Citing people familiar with the matter, Bloomberg reports that reps from China's liaison office and other officials attended Hong Kong's recent crypto events over the past few months. Now, this development comes about a year and a half after Beijing's sweeping ban on all crypto transactions in mainland China, and the low-key support reportedly signals Chinese officials are planning to use the city as a testing ground as they keep tight control on any activity related to digital assets on the mainland. Some firms are now pushing to register their businesses and return to the Chinese territory after Beijing's industry ban in 2021 forced many to set up shop abroad. In fact, crypto exchange Wobi tweeted yesterday that it is, quote, stoked about Hong Kong's pro-crypto policies and is working hard to secure a crypto license there. Next, starting today, the Japanese unit of FTX is allowing customers to withdraw deposits of crypto assets and fiat currency. The Japanese unit made the announcement yesterday, about 3 months after the crypto exchange filed for bankruptcy and those assets were frozen. FTX Japan said customers could now withdraw assets through a crypto exchange it bought 1 year ago called Liquid. Last up, the hype over OpenAI's ChatGPT is reaching crypto scammers. CoinDesk reports that hundreds of fake tokens branded after the generative AI platform have launched in recent weeks. The outlet found that about 132 tokens were listed on the BNB chain and 25 were on Ethereum. As of noon Eastern, the largest of these ChatGPT branded tokens had a market cap of $291 million, according to Dex Tools. Now, the way that some of these scams work is by utilizing smart contracts. Some take huge fees when an investor tries to sell the token. Others allow the scammers to drain funds from the token. All right, on to our main story. Venture capital investment in the crypto space kicked off 2022 at an all-time high and then took a nosedive after scandals and bankruptcies hit the industry hard. So where does VC investment go from here? Crypto World's Talia Kaplan explores crypto VC trends, the areas of focus, and the outlook for this year.
Venture capital deal activity in crypto dropped sharply in the last quarter of 2022 compared to the rest of the year, with the lowest amount of capital raised in November and December. That's according to the latest research on crypto VC trends from PitchBook. And that shouldn't come as a surprise given the collapse of FTX at the end of last year. But those VC investments really started their decline in May.
That's when the Lunar Terror collapse happened, and then shortly after, Three Arrows Capital and Celsius and BlockFi. So it's been on a downward trend since really mid-2022.
According to PitchBook, in Q4, crypto VC deal count reached its lowest level since the fourth quarter of 2020 with 345 deals. That represents a drop of about 40% from the prior quarter. The report points out that the third straight quarter-over-quarter decline to $2.5 billion is the lowest amount of capital invested since 2020.
What happened in the bull market, 2020 to 2022 crypto bull market, the diligence cycles were really compressed and deals were happening super fast. So people weren't looking really closely into what these businesses were doing, what the business models were, who their users were, how they were growing. And so what you're seeing is now in this new paradigm that we're in, all of that has been slowed down. Diligence cycles are going months now instead of days and weeks previously in the bull market run. So because of the slowdown in capital deployment, you're going to see a lot less activity going into the space.
PitchBook's Robert Lay says expect VC investments to continue to drop in the coming months. In fact, he says January activity already proved to be even lower than December.
And I guess by definition, with valuations coming down, people, looking to invest, obviously invest less. I would say naturally there's probably been a lot of losses. And so people are really being very selective now in terms of the companies that they want to follow on with. It's companies where they feel there's a strong management, a very clear strategy, And so I think there is a lot of dry powder. People are deploying, but in a much kind of more measured way. So I think that, is something we'll see as a feature of this year. And I don't necessarily think that's a bad thing. There was a lot of cheap money. Valuations, I think by anyone's definition, were probably a little, kind of too toppy. So I think a little bit of pause and kind of really having more due diligence and forensic kind of DD on these companies, as I say, I think is kind of important.
Goldman Sachs has made investments in the digital asset space. In fact, the bank has 11 crypto businesses in its portfolio, including infrastructure firm Blockdaemon, crypto data firm Coinmetrics, and the bank's most recent investment, TRM Labs.
So we are seeing some interesting opportunities there at valuations that just look much more sensible.
Is that playing into your current investment decisions?
As we think about our strategy for this year and we think what we're trying to achieve, there are certainly some companies that are of interest, and the valuations definitely, are very different to ones that we were probably looking at 12, 18 months ago. So as we kind of think through, the potential to invest and go through our own internal governance process, I think, all of us see, a much better value proposition.
What do you think it will take to turn things around and bring more VC money back into the crypto space?
So one of the most important things is regulations. There are a lot of folks that are standing on the sidelines, whether it's institutions participating, developers building applications, or investors investing in the space.
Lei says he thinks the downward trend could turn around later in the year, especially because there's a lot of capital sitting on the sidelines.
What would you say are some of the areas sucking money out of investments in crypto right now? Is that money going to other areas in tech instead, like AI or chat tools, for example?
Yes, I'm sure some investment dollars that would have went to crypto and Web3 this year shifted over to AI, particularly in generalist VC funds, because they have open strategies and they can invest across any technology sector, so they can shift however they want. But crypto native funds, crypto focused funds won't, right? They're in the LPAs, which is the limited partner agreements, they have to focus on a specific sector, and the sector is crypto and Web3. Over $20 billion was raised just in 2022 alone. So that capital still has to be deployed into the crypto and Web3 over the next 2 to 4 years.
And if you're wondering where most of the cash in the crypto space will go this year, Lei says 2 key areas will continue to soak up most of the venture capital funding: infrastructure and Web3.
I think the thesis a lot of investors I talk to still stands. They think that the eyeballs today that are on YouTube and Instagram and TikTok is going to migrate over the next 5 to 10 years into the metaverse. And we understand why Facebook is spending tens of billions of dollars on the metaverse, because they think that's where the eyeballs are going to move as well. And so investors think that, and so you're going to see more investments into that space.
What startups are you interested in investing in now?
We invested in Hedera, which is a layer 1 protocol we're very excited about. We really think that the market is moving kind of from this speculation phase to the realization phase, where the larger traditional finance industry is moving in. So, protocols like Hedera, HBAR, is really in that sweet spot. And we've also looked at the infrastructure side of NFTs, and we're actively now looking at the Web3 space.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.